Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to this Trading Room Gems. This will just be a quick little video for those of you who don't have an hour to listen to the whole Trading Room recording for today. And the reason for this one today is basically we're going to get three interest rate decisions this week. This evening at in 3 hours time, we're going to get the Fed. And they are expected to increase the interest rate in the US by 0.25%. That's what everyone's expecting. Then we have the ECB. Now, I don't think they're expected to increase the interest rate, but they will be cutting back on the quantitative easing, as it's called. Which should strengthen the euro, and we'll also get some sort of announcement from the Bank of Japan, which I'm not entirely sure at the moment what direction that's going to go in. Hopefully it's a good one, because I have been chasing these I've been chasing these yen trades all week, the last couple of weeks, and keep getting stopped out. Haven't lost anything much. We've got one on today. We'll have another look at it in a moment. But anyway, so now I've got people through TradingView saying, well, what do you think is going to happen? Well, it's obvious what's going to happen. I won't know anything more than anyone else whether the Fed's going to hike it or not, but the experts say that yes, they expect the hike. What I can say is, what do I think how it will affect our DXY, our dollar currency index? Well, what we've been saying over the last few days is our target is down here somewhere, down in that region, down there somewhere our target is. Initially we thought it was going to kind of go straight down there in some sort of zigzag. Now it looks like we've got a 3, which means that will be our A. Could mean that's our A, guys. Which means that this should then become a B and may come up to that area. And then we'll have a C. Okay, so if the interest rate is hiked as we expect, we should probably see a push up like that, which will probably complete this first part of the move to the top. We know it has to be a three-wave structure, and therefore it'll probably spike up, and then people will take profits, and then it'll start to move again. And when it gets back up to there, something else will have happened. The ECB will have come out, or whatever reason. We don't need to know the reason. All we need to know is that this is what Elliott worked out over years and years and years, and when we trade it, when we follow it, it tends to be right most of the time. So if that's what happens, we'll get a push up, we'll get a bit of profit taking, then it'll creep up a bit more, might get to the top, might not reach all the way, but from there, because you're going to say to me, well, you're going to try and trade it up. No, I'm not. The reason I'm not is because in the past when I've tried to trade the news, what it does, sometimes it spikes up and then it goes the other way, or it spikes down and then it spikes up, taking you out no matter which way you tried to trade it. I don't know if it's deliberate manipulation or, it's just part of the market, but that's often what happens, guys, when you try to trade the news. So I stay away from it. I wait till it's over, and then we see if we can get in on the pullback. For example, if it pushed up and pulled back, and our analysis had told us to expect it to push on up, then we would get in on the pullback, not on the initial move. Okay, our analysis is telling us that this whole move up here, that C wave, needs to be corrected a bit deeper, and therefore we're trying to work out how are we going to get from where we are now down to there. Well, that's possibly the route. Okay, so then you can take that information, you put it into everything else. Let's wait, and the reason for waiting is this, because if we have, let's just look at our analysis, our Elliott wave theory. So you have an impulsive move coming up like that. When it gets to its fifth wave, you get some sort of correction, often a flat and A B, C, or a zigzag. Okay, so if it's going to be a zigzag, then it would go from here. But the fact that that's a 3-wave structure means that we should get a 3-wave back up. If that was a 5-wave structure, then we could look for another 5-wave structure there. Elliott tells us what to expect, guys. Therefore, if you learn Elliott, if you know it inside out, it'll help your trading enormously. Let me just draw that again. You have a 5-wave coming up. What we now have is a 3-wave coming down, which means we should get a 3-wave coming up and then some sort of a C wave, which should break that bottom, probably come into the area of that 4th wave on the way up in a 5-wave structure. If we've got that element, and that element, what's the probability that the next move from there is going to be a 5-wave coming down and breaking that? Very high probability. That's why we wait for it, and that's what we'll trade. Okay, guys, that's the reason for waiting and waiting and waiting and waiting, because that's the high probability setup. And when we trade 5-wave structures, impulsive structures, even though it's a C wave, a corrective wave, it will be a 5-wave impulse coming down. And provided it all sets up, guys, but if it sets up, we've a high probability of that happening. And we'll wait for that, not try and trade this up, because we don't know, is that going to spike up or is it going to come down? Then we have to reassess. At the moment, we don't know. When it gets to there, we will know with a high degree of probability. Okay, that's the first bit. The second bit is the little trade that I put on earlier. As usual, these things are scaring the bejesus out of me, because they never seem to just go. They always go when you're not looking at them, when you're not trading. But when you're, you know, it's like watching a kettle boiling. Was it to say a watch pot never boils, or a watch kettle never boils? When you zoom in on these things, guys, there was a little setup I put on earlier. It's in the trading room. We'll just quickly go through it now. We've had a double top. We've been expecting it to go down. It came back up. This is the Swiss franc versus the Japanese yen. We had a break of the trend. We had a 618 pullback. I got involved at 618. There it is there. It moved up a little bit, came down, and I was kind of hoping, yeah, here we go, guys. Gangbusters. No, it's come back up and almost took me out. We've got more or less a triple top there. The good thing is that we're getting over this part, and we take this to 15 minutes. Okay, that doesn't help on the 15 minutes. Let's take it back to 30 minutes. Okay, from there, when it first came up, we're getting a divergence. Okay, probably best back on the hour, guys. There, we're getting a divergence. In other words, it's come back up to the same area, but with much less momentum, much less lower volume. So this should still break and come down, guys, but as usual, it never does it the easy way. So it's had me worrying a wee bit. We got very close to being taken out there, but I'm still pretty confident that this will go. Okay, guys, that'll do us for today. Quick 10-minute video. Hope this helps. Hope you're enjoying these. And as usual, I keep saying, guys, or you guys, keep saying to you all, I'm on Telegram now. Look me up, Stephen Nixon on Telegram, Logic FX Trading, and I'll add you to the private channel where just us subscribers will get my setups. I will have a public channel where I'll give little bits of stuff away just to entice more people in. The bigger the group we have, the better it'll be for us all in the long run, guys, as we'll have more people analysing more charts and asking me more questions, which gets more out of me. Okay, guys, that'll do for today. Bye for now.